You are welcome to Graceman Knowledge Hub. In this episode, we are having detailed exposition into the difference between withholding tax payable and withholding tax receivable. Before going to the differences, I would like to do a little recap on withholding tax. You can get the link for the exposition on withholding tax and VAT and withholding tax detailed explanation in the link above. What is withholding tax? Just as I said, a little recap. Withholding tax is an advance payment of tax and the advancement of income tax, excuse me, and this is deducted by the employer in the case of what contract between the employer and employee, and in the case of contract between supplier or contractor and contractee, it is the obligation of the customer to withhold tax on behalf of the contractee. This simply means that when there's a contract between an employee and an employer is the agent of the government to withhold tax on behalf of the employee. So that means that the employer withhold the tax and remit to the government or the revenue on behalf of the employee, and the employee utilizes the tax at the point of what? Filing the income tax. Now, going to the relationship or tax withholding tax on the part of the contractor and the contractee. It is the obligation of the customer, in this case the contractee, to withhold tax on behalf of the contractor. That simply means that the tax that is being withheld will be utilized by the contractor at the point of what? Filing the income tax. Thank you. So let me just read through what I have here. Withholding tax is an advancement of what? Income tax. It is remitted by the employer, just as I said, on behalf of the employee in the case of contract between both. It is remitted by the customer, in this case, customer or what? Or contractee, on behalf of the what? On behalf of the supplier or what? Contractor, in the case of what? Invoice transaction between both. Now, we now go to the difference or differences between what? Withholding tax payable and receivable. From the word payable, we should know that this is a liability. From the word receivable, we should know that what? This is an asset. Now, number one difference is it is due to the beneficiary. Withholding tax payable is due to the beneficiary. Example of beneficiary here is what? Is employee. That simply means that withholding tax payable would have been deducted by the employer. So at point, the employer is deducting the withholding tax from whatever is due to the employee, it will be credited to this payable account, to withholding tax payable. And in the case of a supplier, it will be what? It is due to supplier. And in the case of payment to remuneration or allowance to director, it is also due to the director. So withholding tax payable is the what? Is the withholding tax that is due to revenue on behalf of either employee, supplier, or what? Or contractor. In the case of withholding tax receivable, it is due from customers and what? And contractors. Now, in fact, I can also include employer here, because if the withholding tax payable side is due to employee, that means the person that is going to remit it is what? Is the employer. If it is due to supplier, that means the person to what? To remit it is what? Is customer and what? And from contractors. So that is that. Now we go to the second difference. It is a liability. Just as I said earlier, withholding tax payable is a liability. That simply means that you will find it in the liability position of the entity. I will shed more light on that later. Withholding tax receivable is what? Is an asset. Why is it an asset? It is an asset because this is the withholding tax that has been deducted either on behalf of the employee, director, or what? Or the contractor, which the contractor is expecting to use to what? To defray the income tax liability at the what? At the point of what? Filing, or at the end of the what? Financial or tax year. The third difference I have here is it is debited at the point of remittance to the revenue. Now, for us to say that withholding tax payable is a liability, for it to be a liability simply means that the natural balance is a what? Is a credit balance. So that now also further implies that at the point where the entries are being passed, it will be credited. So when the entries are passed, it is credited. So at the point of remittance, it will be debited so that it can reduce the credit balance. That is that. So it is debited at the point of remittance to the revenue, pending when it is remitted to the revenue on behalf of either the contractor, supplier, or the what, or the director or employee. It will be credited. That's why it is a liability. The journal entry in the examples we have will shed more light on this. But at the point when it will be remitted, at that point, withholding tax payable will be debited and the bank will be what? Will be credited. In this instance, withholding tax receivable, it is credited at the point of utilization. What is this saying? All the while that the customers are withholding the tax and remitting on behalf of the supplier or contractor or the employee or directors, it will be debited. That is why it is what? It is receivable. That simply means that what, the natural balance, just as I said earlier, is a what? Is a debit balance. So at the point it will be utilized, what will happen? Let me just do a go more in depth into this. At this point, what happens? The general ledger of the customer will be credited, while the word general ledger of the withholding tax receivable will be debited. Just as I said earlier, at the point of utilization, it is credited. What does it mean? It simply means that, just as I said, that the natural balance being a receivable is debit. That means that at the first initial entry, the general ledger of the debtor of the customer is credited, while this withholding tax receivable is what? Is debited. So at the point of utilization, what happens? The withholding tax receivable account is what? Is credited, while the what? While the income, while the tax liability is what? Is debited. This is what happen at the point of what? Utilization. We'll shed more light in the following example. We have the example here. Intelix One got a contract to supply 1,000 units of laptops to outsource global technology at 500,000 naira per laptop, VAT exclusive. What does this mean? VAT exclusive here means that this 500,000 is what? Is 100%. Right? Now again, taking clue from the exposition we did on withholding tax, we said that the first thing to do in this kind of scenario is to identify who the supplier is and also identify who the customer is. Looking at this now, Intelix One got a contract to supply 1,000 units of laptops to Outsource Global. Outsource Global here is the customer. OGT is the customer. While Intelix One is the what? Is the supplier. Again, who is the agent of the government to withhold tax? Who is the agent of the government to what? To charge and what? And remit VAT. Just as I said, if you miss the video, you can still get the link at the top there. Just as I said, the agent of the government to withhold tax is the what? Is the customer. While the agent of the government to charge VAT and remit is the what? Is the supplier. So because in this scenario, we are paying attention to what? To withholding tax payable and withholding tax what? Receivable. We will pay more attention to what? To withholding tax. Now we go. Intelix One got a contract to supply 1,000 units of laptops to Outsource Global Technology at 500,000 naira each. We want to shed more light on how withholding tax payable and withholding tax what? Withholding tax receivable works. Right? Now, remember we also said that withholding tax payable is due from the what? From the customer to the what? To the supplier or contractor, employee or directors. Right? While withholding tax receivable is due to the what? To the supplier, contractor, employee, and is due from here to this. That simply means that OGT as the customer in this instance is the agent of the government to do what? To withhold tax. So what will be the accounting entry in the book of OGT? What will be the accounting entry in the book of what? In the book of Intellix 1. The accounting entry in the book of OGT, being the customer, will be recall that ISCC says that in recognizing the cost or the initial cost of an asset, the local VAT or the VAT that is attributable to the procurement of the asset will be what? Will be recognized with the cost of the asset. So in this instance, we have here that Intellix 1 got the contract to supply 1,000 units of laptops to OGT at 500,000 naira per laptop. That simply means that for OGT to recognize these laptops, right, OGT will need to include the VAT in the cost of the what? Of the laptop. So that simply means that what we have here, equipment. Just as I said also, this is 100%. So let's assume that the VAT is what? VAT is 10%. That simply means that the cost of this laptop will be what? Will be 550,000 naira each. 550,000 naira times 1,000 unit of laptops. We can then say that we have 550. That will give us 550 million. That is the cost of the what? Of the laptops. Now, OGT is the agent of the government to withhold tax. In this instance, withholding tax payable will be credited, right? Withholding tax will also be based on the contract sum. What is the contract sum? The contract sum here is what? Is 500,000 naira. Remember that Intellix 1 as the agent of the government to charge VAT, right? This 50k each on the 50,000 each on the laptop will also be remitted by Intellix 1 to what? To the revenue. Please take note. So withholding tax will be charged, and what is the formula for withholding tax? This is what? 10%. That simply means that what? The 10% in this instance will be what? Will also be 50 million naira, right? On the contract sum. So we have what? We have 50 million here. That now means that what will be due to Intellix 1 will be what? Will be Intellix 1 will be what? 500 million. That now gives us what? This is in the book of OGT at the point of making provision for this transaction. Two things are involved here. OGT will eventually remit the withholding tax, right? OGT will also eventually pay Intellix 1. Other things being equal, let's assume that OGT will be remitting the withholding tax on behalf of Intellix 1 at the same time they are making the payment to what? The Intellix 1 for the supply of this laptop. What will be the accounting entry? At the point of payment to Intellix 1 and withholding tax. What will be the accounting entry? The accounting entry at that point will now be to do what? To debit withholding tax with the what? With the 50,000 naira. And what? And credit bank. Remember that the explanation here is still the treatment in the book of what? Of OGT. This is still the treatment in the book of what? OGT. This is the treatment in the book of what? OGT. Now, this is the remittance of what? The withholding tax OGT as what? As withheld from what? From Intellix 1. Now I said that this entry is showing this is showing the accounting entry at the point of what payment to both Intellix One and also the remittance of withholding tax to the what to the revenue. So this is for the withholding tax. That now means that the withholding tax payable that had 50 million balance right at the point of this accounting entry will now be debited with the same amount, and other things being equal, let's assume that the only transaction that has been posted with withholding tax payable was this 50,000 naira. That means that what after debiting withholding tax payable with this 50 million naira, that means that the balance of withholding tax payable after passing this entry will be zero. Now, payment to Intellix One, that also simply means that what the general ledger of Intellix One will also be what debited. Why? Because initially it was credited because of the owing. Now that the payment is being made, it will be what to be debited with what 500 million naira, and the bank where the payment is being made from will be also be what credited with what 50 million naira. So we have our what our description here. So we go further to solve this, to show how this will appear in the book of Intellix One. Now, having shown the accounting entries in the book of OGT, we will need to also show the accounting entry in the book of what Intellix One, in this case who happens to be a supplier, so that the whole explanation is clear. Now in the books of what of Intellix One. In the book of Intellix One is the one supplying the laptops, right? So in the book of Intellix One, let's have our description. In the book of Intellix One is the one selling the laptop. So for Intellix One, it will be what? Revenue. What is the cost of the laptop? Cost of the laptop is what? Remember that in the book of OGT, because OGT is the one buying the laptop, OGT added the VAT, the tax element, to the what? To the cost that was recognized in the PPE of OGT, right? But in the case of Intellix One will not add the VAT element. Why? Because Intellix One is the agent of the government to do what? To charge and remit VAT. Excuse me. So in the book of Intellix One, what will appear in Intellix One revenue will only be the what? Will only be the sales or the selling price of the laptop. So in this case, the selling price of the laptop is what? Is 500 million. Again, because Intellix One is the agent of the government to charge VAT, excuse me, that now means that what? The VAT payable account of Intellix One will be credited with what? With 50 million naira. Because we have the assumption that what the VAT is 10%, right? That now means that the total payment that is being expected from Intellix One is what? Is 550 million naira. So in OGT, excuse me. So the book of OGT in the books of account of Intellix One will be debited with what? With 550 million naira. Now, OGT is the agent of the government to withhold tax. That now simply means that whatever Intellix One we get from OGT will be 50 million naira less. Why? Because OGT is the agent of the government to withhold tax. Now we go to the accounting entry at that point where OGT make the payment to Intellix One. Accounting entry of what? OGT payment to what? Intellix One. Let's go. We have our description. We have our debit in million. We have our credit in million. So we go. At that point of payment to Intellix One, what would happen? That simply means that the bank account of Intellix One will be what? Will be debited with what OGT paid, and that is what 500 million naira. While the books of OGT with Intellix One will be what? Will be credited with what? With 500 million naira. Now, it is clear that the book of OGT in the books of account of Intellix One will still be having a debit balance of what? Of 50,000 naira. What does that mean? Because Intellix One knows that OGT will be remitting withholding tax on its behalf. Intellix One, we need to what? We need to confirm after collecting, we need to post an accounting entry after collecting what? The withholding tax credit note. So the accounting entry, we go further, accounting entry at the point of collecting withholding tax credit note from OGT. The accounting entry at that point will be to do what? To, let me still have my description. I have my debit side. The accounting entry at that point would be to debit withholding tax receivable. Because at that point, OGT has remitted the withholding tax to the revenue on behalf of what? Intellix One. So that now means that what? Intellix One already has the money in on the credit side in the what? In his account with Federal Inland Revenue Service. Right? So at that point, he can confidently debit what? Withholding tax receivable. Waiting for the what? For the end of the year when the account will be filed and the withholding tax receivable can now be used to reduce whatever what tax liability Intellix One would have with the revenue. So what do we do at this point that he or she, that OGT, that Intellix One has the withholding tax credit note, having confirmed that OGT has remitted the withholding tax of 50 million naira on its behalf. So we have the tax receivable debited with what? 50 million naira, while the GL, general ledger of what? Of OGT in the books of what? Intellix One will be credited with what? 50 million naira. Other things being equal, that now means that what? At this point, the books of accounts, the entry, the general ledger of OGT in the books of what? Intellix One will now be zero. The next question will now be, just as I said when I was explaining the difference between the two. At the point of utilization, let me go further to express that. At the point of utilization, at the point of utilization of what? Withholding tax, what happens? At that point, the tax liability account will be what? Will be debited with what? With 50 million naira, while the withholding tax receivable will be what? Will be credited with what? With 50 million naira. Now, let me go further to explain that it is possible that the tax liability at the end of accounting year will be what? Will be less than the total balance in the withholding tax receivable account, right? In that instance, the entry that will be passed against the withholding tax receivable account will be to the extent of the what? Of the tax liability of that accounting year. That simply means that in a situation where the tax liability for that accounting year is less than the balance in the withholding tax receivable account, that means that the withholding tax receivable, right, the excess can be carried forward to be utilized in the subsequent year. For further exposition into value-added tax and withholding tax, you can use the link above. Should you have any question, do not hesitate to use the comment section. Do not forget to like, subscribe, and share. See you in the next one.